this. We've got the preferential rate for long-term capital gains and qualified dividends, 20 versus 37%, or 23.8% versus 40.8% if you want to include the Medicare component. Tax-free stepped-up basis at death. So if Jeff Bezos passes his $200 billion of Amazon stock, which he bought for approximately zero to his kids, those $200 billion of gains are washed away, and his kid's basis is his basis at death. And as Morris alluded to, Jeff Bezos can get that money now without selling his Amazon stock. He just has to go to his broker and say, hey, would you lend me some money secured by my Amazon stock now? So I'm not going to sell, but I want to spend the cash now. And if you're, I don't know who his broker is. If you're Merrill Lynch, you're going to look at Jeff Bezos and say, like, yeah, I'll lend you money. You're probably good to repay as long as I'm not getting too close to the $200 billion of value. So he's tapping into he can tap into tens of billions of that $200 billion over his lifetime without paying any tax. And we have carryover basis for gifts. So when Jeff Bezos acquires Amazon shares and then gives them to his kids for $200 billion, or when they're worth $200 billion, that's not a taxable event under current law. But if he gives them to his kids in life rather than at death, then they get his basis, which is now approximately zero.